Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update, and this is for Wednesday the 3rd of October 2018, and we're just after the 3:20 time frame. So let's talk a little bit about what's going on here as we're looking at the metals. You know, the gold market tried to break out to the downside last week. No follow-through, popped up sharply yesterday, gave back a chunk of that today. Silver, though, is still gaining on gold, and I consider that favorable for the metals as a whole. In other words, world economies still looking pretty good. The stock market, you can see the U.S. economic data strong, and the gold was under pressure as the dollar soared again, and that's because interest rates, real rates, are soaring. That's not an understatement. Soaring. This is a huge break in the bonds, in the notes, and that kicks up interest rates sharply higher. It's just like every cylinder that comes out of each of the economic reports we're getting are positive. Obviously, the markets are going to look to see Brett Kavanaugh's papers. The FBI could turn them in as quick as today. Give you an idea how poor our government is. They're going to put that in a safe, I guess, somewhere in Congress. I don't know where. And each senator can go look at it, but they can't have their own copy. Reason? Leaks. All right, in the gold market, 1350, 320 to 1161.40, a broken record there, but the sideways action is very clear as to what's going on. As I said, an attempt at a downside breakout, the market rallies sharply back higher, gives back a chunk of that. Where is the market in terms of the swing lines? Well, in the swing lines, you have a pattern of a lower low, and the high is higher than that high. When you don't get succession of higher lows, higher highs, or lower highs, lower lows, you have this type of setup in some manner, a higher high, lower low, which is not a trend. And that's what I think you've got. You have a market that stepped out of a trend when it had lower highs, lower lows. Where's the battleground? I want you to look at the red line. That's the 18-day average of closes. From that number, trends come. But it takes a while as they churn along it. What happens is the Bollinger Bands, which are these black dashed lines, an algorithm, if you will, designed to keep the market trading within it 95% of the time, well, they start defining the sideways action. Yes, I could remove them, and you can draw lines at the tops and the bottoms. Why not? It's not hard to do that. The problem is you don't have to. This is telling you resistance is 1214.60, supports 1190.40, neutral territory, the 18-day average of closes, and the market has upside. You heard me, upside momentum. The bias today, because of where the market's going to finish, is going to be about neutral. It's going to close right around the 18-day average of closes. When we come to the popular ETF GLD, you have a more bullish pattern. I said that yesterday. Higher lows, higher highs. I think the pros are buying this market right here at 113.38. Doesn't mean they have to be, by the way, but from the chart action. I think they're wrong if prices get under 112.15 because you would break the pattern of higher lows, higher highs. The risk reward is a little strange because if they're buying there, they've got to risk $1, and the first resistance point is not quite. In other words, you're going to make a little less than you're risking because 1447 is the first resistance as I see it. When we come to the miners, they are overbought, maybe going to turn back down here for a bit, but in an overall bull trend. The question, as I posed to you yesterday, was the market, let's get there, here's yesterday, did the market have the strength to get to the upper Bollinger Band? It missed it, folks. It missed it by 6 cents, not very much. But people saw that resistance. It did the same back here, and then it slipped back to the 18-day average of closes. With momentum being overbought, I would not be opposed to thinking this market's going to pull back, look to see its support. But it's in an uptrend, overbought, upside bias. The gold-silver ratio continues to favor silver gaining on gold. So we made a peak up here. Let's call it the 8,500, 85 ounces of silver that you needed to get an ounce of gold. You're back to around 81.96 right now. The lower that goes, the more beneficial it is to silver. Just think of a shopping basket. Do you have to put 85 ounces in? All of a sudden, 3 ounces less approximately. That means the silver is buying more gold. And on the silver chart, this is a better looking chart than gold. You have the pattern of higher lows, higher highs. Now what the market is doing is running the upper Bollinger Band. It gets over it, pulls right back to settle on it. Could prices sink back to the 18-day average for support? Yep. If they did on the current chart pattern though, because the last break low is 1439.5, that would throw the market back into neutral territory. In gold, by the way, on the 4th, tomorrow, is when there's a seasonal day that comes into play, according to more research, where the market often favors the upside. Remember, past history's got all kinds of limitations. In the copper market is staying overbought. It is staying over the 18-day average of closes. So the bias is up. It's trendless. You have a pattern of a lower low and a higher high. It's got a combination of fairly strong resistance from the green line, the 100-day average of closes at 288.90 to the 290.25 area, the upper Bollinger Band. When we come to the platinum market, I see an overbought market, again, void of a trend. Yes, it's over the 18-day average of closes with upside bias, but it's got a pattern of a lower low and a higher high, similar to copper. It's got the 100-day average of closes as resistance to 846.90. Support has been showing itself at that 18-day average of closes. When we come to the palladium market, it's lost its embedded reading, which often leads to price and the 18-day average coming together. Is always the right word? It is not. Go look at the bonds and go look at the bonds. They didn't do it. The notes did. The 5-year notes did just what I'm talking about when it lost the embedded reading and went to the 18-day average. But you've got to just keep your eye on where these markets are headed. If it starts down from here, to get to that 18-day average, you would create a pattern of lower highs and lower lows. So the question is, on a close under 1022.30, would that set up a downtrend? Something to think about. You always think ahead on a chart what might be. Now in the dollar index, back to the upper Bollinger Band, overbought in an uptrend. What else do you see on the chart? Today was an outside day up. Outside day up means you took out the previous day, which is Tuesday's, low and high, closed higher on the day. Yes, you've closing or going to close right at or over that the upper Bollinger Band of 95.42. But if you take out today's low, either on Thursday or Friday, I'd call that a bull trap. Bull traps mean that the market catches a group that got long the market and it tries to get back to a neutral zone. In this case, the closest moving average would be the 18-day at 94.35. In plain English, you don't want to see today's low taken out to keep the momentum going. You put that all together and you try to say what next can be. Well, I'm going to write a silver report. I wrote a gold report, and I think it's been pretty timely and pretty good. I haven't done a silver report, so now I'm going to bring you up to date on silver. And yes, it's going to be commentary, the analysis, some price counts, seasonal charts, give you a good idea as to where I think the market might head. You'll get a link. How do you get it is going to be the big thing. Well, the smartest way is call my staff and get on our mailing list. I haven't written the report. I'm going to start tomorrow. Otherwise, you can go to our website. You'll see a list of free offers, our carousel of free offers. Click on it and sign up for that. Same thing right here. That'll take you if you see this icon right there. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.